Hey guys, welcome back to the channel, welcome back to a new video. Hope you're all doing fine. In today's video we are going to look at the stock market. This is a follow-up of a video that we did some time ago in combination with the DXY, the dollar index. We're going to look at what we have been looking at the time and what we can expect for the future, possible trades, all that good stuff. But not before I've asked you to like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. Both of those links you'll find in the description. Without further ado, let's start diving in. Let me first of all start off with addressing the elephant in the room, and that is that everyone since this weekend is talking about a possible World War III because everything that's going on in Israel and Gaza. A little bit surprised by that because no one was talking about World War III when Russia invaded Ukraine, but now all of a sudden people are. I have been looking at some historical data because of course a lot of people then want to reflect that on the stock market and then saying the stock market will go to zero, yada yada yada. Well, if there is anything that we can learn from the wars in the last 100 years is, believe it or not, that usually the stock market starts rising the day of an invasion or the day of a war. It sounds very crazy, I know, but that is the historical data. And yeah, that is what it is. So I think A, we are very far away from a third world war, and B, I also don't think that the stock markets will crash because of this, because yeah, although it's very sad, usually these are relatively isolated cases and doesn't impact all the companies on the S&P 500. So with that being said, let's now really dive over to the chart and what we're seeing here. As you might remember from last time, we had two boxes. Those were two gaps on the chart, and I said to you those are getting filled no matter what. Well, guess what? It happened. So I think then now it's appropriate to take these off. And I remember very clearly back at the time when we talked about going lower and filling this gap, I said to you, if we are going to close consecutive daily candles underneath these lows, it's lights out and we're going much lower because it is starting then to become one big liquidity fest here on the bottom. Well, guess what happened? We had a few wicks here on the bottom, but no real daily closes underneath. And guess what? Now we are going higher again. Is this then now the bottom and are we going to new yearly highs? Because I saw that coming by. I'm not convinced yet. If we're talking really about bottoms, and now we're looking at the daily, sometimes we see that we have a two tap on the bottom. This you could say is a second tap, but I would not be surprised if we see another tap down. Something like this we have actually also seen here. You can see that there is some time in between before we are really marching higher. These lows were actually not so pretty in the sense of double tap, but you can actually see that there are nice rounding bottoms. So in that sense, actually it looks good. And similar actually we also have seen here. One tap, and this was then a major wick, but it is actually a second tap. It doesn't always of course have to play out, but it is a quote-unquote character of the S&P 500 that it just likes to make these taps. With that being said, we also had the purple line here on the top, and it said this is liquidity that you want to be taken, no daily close above, if else we are going to make yearly highs. Well, guess what? We took the liquidity and went lower. You would almost say I will do this on a daily basis. So right now, like I said, am I very bullish? Are we going higher since we hold this low right here and we are moving higher? No, because if we're just looking from a market structure perspective, then we have changed market structure. Lower high, lower low. So we could expect then now again a lower high before we are going lower. For example, 0.5 golden pocket, 78.6, you know the drill, somewhere in this area, and then we're talking about 4,440 points, and then eventually go lower. My ideal scenario still stands that if we are closing underneath this area right here, that the liquidity fest is starting, and then we're really going lower towards 4,050 points. However, what would flip my bias again is, let's say we are going higher from this point, for example, again the golden pocket, whatever, going lower and really creating a clear higher low on the daily time frame. I do not want to see wicks as low as here. You really want to see a clear higher low, because then you could be making up for again a change of market structure. And then of course the break would be taking out this lower high that we created. You have your high, your lower high, your lower high, and then you're creating your higher high, and then really you could say, okay, now we have broken market structure again to the upside and we're going higher. I really want to see that on the daily, if else I'm not convinced. On market Cipher B, it looks okay. I am still keeping in mind that we might once come down again, but I cannot ignore that this actually just looks bullish. Momentum wave higher, money flow looks like wants to curve around, VWAP higher, RSIs higher and tied together. So it looks actually pretty bullish. Let's quickly move over to the weekly. What do we see here? Yeah, not so convinced yet. Money flow is clearly coming down. Momentum wave is coming down. RSIs slowly getting a little bit gap, but actually are not telling us so much. So if you have a few green weeks, eventually of course this could go higher and roll over. That will be a completely different story, but then we're really talking about end of October, because it needs multiple weeks. With that being said, let's also quickly then now look at the DXY, because of course these two usually go hand in hand. Bitcoin can sometimes couple and decouple on the DXY, but we're usually seeing that the ES, or at least the S&P 500, ES is the future market, is moving relatively the same, or I have to say in opposite of the DXY. I have not changed this chart since the last time we have looked at this. So this was the idea of mine, to say, hey, we're going higher, we're going to hit the golden pocket. I stick to my guns. I'm still aiming for that golden pocket, macro lower high, before we're really rolling over. Passing this and really starting to close a few couple daily candles above the golden pocket, I think we're going to take out the highs eventually at and around that 114. My golden pocket target is still 109. If we're looking at market Cipher B, my god, if you ever looked at something bullish, well, this is it. Look at that money flow, how extremely fat that is in the green. This is not going to suddenly to roll over. It's probably going to stay there for a while. Momentum wave could be cooling off a little bit, and then again and again and again, and then you just have these major humps on the top, and then eventually you're going to roll over. So therefore I am still pretty bullish on that. Wow, that was a big thunder. Holy crap. Therefore I'm still pretty bullish on the DXY. This of course is now a major and important low. So this wick here on the daily, 105.6. I would not be surprised of course now that we're going lower a little bit, because this looked incredible, actually just stair-stepping higher. We have also seen this with the S&P 500. It just looks incredible. Matter of fact, let me zoom out on the weekly. Have you ever seen something like this? So many green weekly candles in a row. I mean, this screams bullish. So yeah, maybe to cool off a little bit to then eventually go higher again. I'm all for it, and I have a hard time believing that this is the top. Have to say, just from a candle based perspective, kind of looks nice actually for a high, because you have then here a candle, the high candle. This is also then really pushed down by the bears, as you can see, and then now you are creating your lower high, and then you really have a nice rounding top. So that is the only thing I have to give for it if you are bears on a DXY, but I actually really want to see us to go higher, mainly just because that daily just looks incredibly bullish. Look at this, we are going higher here for, what is this, since half of July, and look at the S&P 500. Took a little bit time, but eventually we're going lower the entire time since. And now you're seeing that the S&P 500 is going higher on a daily, and now you're seeing that the DXY is going lower on a daily. So it works actually pretty nice, and therefore I'm also still remaining in this bearish idea, and I'm saying, well, I'm just thinking for now that we have to respect the market structure, and that is that we most likely are going to create a lower high and then again to go lower. One last note that I want to make that does not flip market structure. A common mistake is that someone says, okay, we're having our high, a higher low, lower high, we broke this is change of market structure, then we are going to make a lower high again, and then we're making an equal low, and then we're off to the races. This equal low does not change market structure. A lot of people sometimes think that an equal low does not change market structure. So you want to really see this low needs to be very obvious and higher low. And of course, if we're creating a low low, it's still a bearish market structure, but an equal low does not make it a bullish market structure. Let that be very, very clear. My targets on the downside, if we're losing this, still 4,050. If we're going higher, I'm looking at the golden pocket, 4,450. For the DXY, I am not changing my bias. I'm still looking out for 109 for the DXY. That will be it for now. Something else for once then, crypto. If you like the content, then please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful, and also feel free to follow me on Twitter and Instagram. Both those links you'll find in the description. See you guys very, very soon again in the next one. Bye bye.